Hey everyone, and welcome back. We're here at Adobe Max with Doug Clark from Adobe. Welcome.
Thank you very much.
How are you?
Terrific. Just got out of an investor session. A lot of energy.
A lot of energy, a lot of good questions as well. There are good questions as well. I recently seen that you joined Adobe not that long ago. You were at Goldman, Pinterest, SentinelOne, different types of companies and industry. What made you switch to something like an Adobe, more on the creative side of things?
Yeah. So you mentioned it, but it's been about 10 years being a sell-side analyst. So that is the community of people that writes reports. So Pines gives recommendations, buy, sell, and a price target. Then similarly spent 2 different stints, one at Pinterest, one at SentinelOne doing investor relations. What was really interesting to me about Adobe is it is a company absolutely like the epicenter of every major topical discussion as it relates to AI and technology. I saw a really compelling customer base, a really compelling product category that is largely defined and owned, and a company going through a major transition as it relates to bringing new innovation and AI capabilities to the market. And it was a really compelling opportunity for me to come in and help tell that story, communicate it to investors, do it both through the strategy and through the financial lens.
Okay. I mean, we're doing it now.
Yep.
Basically, we're doing it now. This will go on YouTube. Today, we've had a couple of announcements. What was the most exciting product announcement, partnership announcement for you here at Adobe Max?
So there were a lot, which is the beauty of Max. I wouldn't pick just one, but I'd put it in and through a number of different lenses. Number one, a big theme that you're seeing here from us today is an expansion of the model choices that customers have. So what do I mean by that? Specifically, you have the best models from Firefly specifically, and we launched something called Firefly Image Model 5. This is hyper-realism, prompt-to-editing based capabilities. Pair that with third-party ecosystem of expanding best models in the market from Google, Runway, Pika, Image, and about 24 total partner models, giving customers, giving creators the choice across all models and the flexibility in a single app at a single price point. So that's really exciting. We can certainly unpack that a little bit more. Secondarily, infusing AI into all the flagship applications that we have, Photoshop, Creative Cloud, Express. You saw new AI assistants. And that comes to the third point, which is bringing a lot more conversational experiences, conversational editing, text-to-prompt-based capabilities, paired with and directly related to those controllability and precision tools that everybody that has known and used Adobe for continues to be the case. Really what those 3 things are outside of the individual product level innovations that we announce, it's the strategy that the company's been articulating. And you kind of pointed out, I've been here for about 3 months, that the company's been articulating for a couple of quarters now, and it's really coming to life in terms of bringing that capability to market. Early snapshot, but it's gotten a lot of positive feedback from investors here today in terms of this is exciting innovation that we've been hearing the company talk about, and now it's actually coming to life.
Okay, so lots of things to unpack here. If we go back in time, Adobe switched to a subscription cloud type of company. Great move, of course. Investors love it. Company went up, became huge. Now with AI, especially with maybe cheaper AI solutions, maybe the market is still raising some questions. How is Adobe, or
Sure,
that was the question maybe a year ago or so before you guided for AI specific revenue. How is Adobe dealing with the balance of needing to show that they're a big player in AI, but also still give creators the choice?
So 3 ways that I would answer this. Number one, and you kind of mentioned this, first and foremost, we have brought a lot of new products, AI first and AI influenced products to market. Last quarter, so Q3, we had over $250 million in AI first capabilities and ARR. Similarly, we crossed $5 billion in AI influence. So this is when there's a capability inherent within the products and then the customer actually uses it. We count that as part of AI influence. Over time, that should grow to 100% of the business. So that's one lens to look at the success. I'd say more strategically, 2 levels. One is through customer groups. This is something we've been talking about for a couple of quarters now, but we really focus on business professionals and consumers. These are the billions of potential folks that are focused on creativity and productivity. We address over 700 million MAU through Acrobat and Express today, growing over 25%. So that's a really compelling customer cohort where we're bringing that, again, creativity and product capabilities to them. On the other side, it's creative and marketing professionals. These are more your professional oriented, your power users that are looking for power, precision, and control. Increasingly as well, also the interfaces and the capabilities and the ideation and the inspiration of AI. So there's a base level kind of AI platform component to both of these customer cohorts. But when we think about bringing product to market, when we think about go to market, and we think about the success of the business, it's absolutely through those two customer cohorts.
Okay. I mean, we'll come back to the third-party models that you've partnered with. Currently, are you seeing, especially, I mean, Firefly is not new. Are you seeing more enterprises use it? Have we seen a bigger shift right now? You've just talked about professionals. Maybe I'm a basic user, so I'll basic. Have you seen an uptick in usage, basically, from both sides of...
Yes. The answer is yes, but I would put in the context of where Firefly operates. And I kind of touched on this a little bit before, but let me unpack it a little bit. Again, business professionals and consumers, think about it at Express. Very easy to use, templatized, customized, interactive creation capabilities, templates, visuals, banners, presentations, images. Then if you're more of a next-gen creator or you want to ideate, you're looking for inspiration, you want to use AI-first capabilities to get that image, to go through the editing process, your all-in one-stop shop is going to be the Firefly ecosystem and the Firefly app. So that's really the sweet spot of creators and next-gen creators. That can also then directly be integrated or paired with, and you can kind of pop into the Photoshops, the Creative Cloud suites of the world, and go for more of that refined precision and power and control to get it ultimately ready for that kind of commercial delivery.
Okay. I mean, I've tried a couple of things today. I'll try some tomorrow. We've seen that in the keynote event this morning, packed with new product launches. Something stood out to me, and that's those third-party partnerships, model partnerships, because this has been probably also a question on the bearish side of things. Let's say you have ChatGPT, you have Gemini, you have all these other models out there. A lot of them are free, although there are some limitations to them. Now you've partnered up with them, so you're offering their services. How does that work economics?
Yes. Listen, I think you're right. I think it's been an evolution, let's call it over the past 2 years, where candidly there was a concern that AI models and AI competitors would be disruptive to Adobe. I think what you've seen and what we've really crystallized here at Max, and honestly for the past couple of quarters, but delivered against it, is there is a coexistence and there is a mutual benefit to having both the first-party Firefly models, which continue to be incredibly competitive, offer commercial safety, IP protection, which is really valuable to the enterprise customer. Not to mention adding in kind of the conversational prompt-based editing, which is really incredible. At the same time, having a choice and a flexible optionality to have, third-party models is really compelling, because the truth is, like, there is a horse race in terms of the capabilities and features on models. What is best today is going to be different tomorrow. So what that means is having the accessibility to all of these different options is really critical to, again, provide flexibility, provide choice, provide aesthetic options. Certain models are better for video, certain models are better for image, certain models are better for audio generation. Being able to package that and access that all in one place is incredibly powerful, both to the consumers at the lower end as well as to the enterprises who are bringing this through their enterprise ranks.
It now makes sense. I mean, my thesis has always been Adobe has a great ecosystem. It has, like you said, 700 million monthly active users, over 700 million monthly active users. My thesis was, as long as Adobe keeps innovating and keeps the pace of innovation alive, why should users leave the ecosystem?
That's right.
Now you've had this bundle. I mean, it's basically a bundle of you pay X amount, you get all of the subscription. It's one subscription to you to rule them all, as they say. How does it work? Because me as a user, I buy the Adobe subscription. Does Adobe buy a certain amount of credits from, let's say, OpenAI or a Google Gemini?
In essence, yes. To touch on something that you mentioned, though, first is there is potentially a lot of complexity, right? Like figuring out what is best today, what is my use case? And you can manage those through separate licenses, separate subscriptions. Or to your point, you have the option to come into the Adobe ecosystem, know that you have all the editing capabilities that can come get you to your final delivery while still circulating from the best ideation perspective. So that's exciting. From a pricing and simplicity standpoint, you're right. One subscription through Adobe, access to all of these models. Some of them are exclusive early glimpses. We just announced a new partnership with Google in terms of a joint partnership, go-to-market strategy, early access to several of their models, and co-development on a lot of the innovations that we'll be bringing to market. We have the opportunity to buy in bulk from some of these partners, thereby passing through some of those cost savings to the customer. So incredibly competitive rates. Our goal at this stage is really to cultivate that ecosystem, drive usage, drive engagement. That is going to fuel future growth for the company. There's no question about that. So we want to make it accessible to folks at the same time.
Okay. When I look at it from a investor perspective, then from a user perspective, at the start, it made sense, right, to give credits away for free. Analysts probably didn't like it because, I mean, when a publicly traded company gives something away for free, you're always asking, okay, how does that impact margins? On the margin side of things, I mean, operating margin non-GAAP is around 46.
That's right.
How do you continue to have mid-40s operating margins, continue to invest in AI, in developments, and please everyone, basically? Because you have to please the creators. You have to please Wall Street. We'll come back to Wall Street. How do you balance all of it?
You're exactly right. So a couple of points. One, we have invested over $3 billion in R&D in just the last 12 months. So there's no question that we are scaled investing in innovation and the future growth of the company. At the same time, it is happening through a responsible lens, which allows us to generate, to your point, mid 40% operating margins. The consequence of that, nearly $10 billion of operating cash flow over the past 12 months. And that kind of fuels the engine. So that is a really powerful asset, the ability to continue to innovate and push the needle forward, where in reality, technology is always a competitive space. At the same time, from a cost efficiency and containment standpoint, injecting more AI into our own internal operations, ensuring from a kind of GPU usage standpoint that we're incredibly optimized, being a bulk purchaser of consumption capabilities or AI model access, again, is an asset. And then from a monetization strategy and standpoint, we do have the freemium model experience where customers can come to Express or Firefly and get a number of generations, experience the power of the platform, and get familiar with it. But if you really want to take it to the next level in terms of the output and the amount of content that you're producing, there is a rate card. There are tiered offerings. So it is a way to match the usage with the monetization in a way that is digestible, again, either through a direct subscription or through a tiered offering.
Okay, no, it makes sense. I mean, there is a menu of pricing, I guess, and that's ever expanding. Last big question, I guess, is companies doing well. Yes, I mean, you're going up and to the right. You're extremely profitable. Free cash flow margin is also, I think, mid 40%. Buying back shares. What is Wall Street missing is basically the question.
Yeah, there are a lot of narratives in the technology and investment space today. I would start with the fact that financially, this is a company that's consistently delivered double-digit growth. To your point, margins and cash flow generation is incredibly strong. I take it a step further to say we view the company as undervalued, and we have been committing capital to buying back a significant amount of shares over the past 12 months and extending before that. We've bought back over 5% of shares outstanding in just the last 12 months, and we continue to allocate a lot of free cash flow to that purpose. I think there continues to be a lot of discussion as it relates to the strategy of the company. And I think coming out of Max, hopefully there is further clarity around our position in the ecosystem as an aggregator of models, as a user interface and conversational experience for customers to not only entice and engage with new users, but also to drive deeper engagement with existing users. In addition to, and we kind of didn't touch on this, but I think it's a really important point, it's not only just about creation, it's about delivery against that. So in an enterprise context, workflow automation, content creation, the full content lifecycle. So it really is a delivering more value to customers that will fuel our future growth for the company. We feel really excited about it. Last quarter, which was about 2 months ago, we raised our full year guidance. We raised our growth rate expectations. We came out earlier today reaffirming our Q4 expectations on the back of strong quarter-to-date performance. So we feel really good about the opportunities in front of us, incrementally about how we're explaining the strategy, how it's being received by investors. And listen, I'm a firm believer that if you deliver consistent execution and you do what you say you're going to do, then things tend to generally produce value.
I agree. I think we can end with that. There is a Wall Street's asking the question, Adobe is basically answering the question. Business speaks for itself. So I think it's going to be quite successful, especially after this keynote meeting this morning. I think creators and investors are going to be quite surprised.
I mean, it was pretty electric. There was a lot of really good stuff on display.
Could have been a lot more, apparently, according to CEO.
There's always more.
Yeah. So thank you for watching. We'll see each other in the next one. Bye-bye.
All right, so hopefully you've enjoyed this interview. If you want to see more of these types of interviews with Adobe or any other company out there, do let me know down in the comment section below. Any feedback is very welcome. I will try and do this more and more, because I do think that this is extremely valuable and not something you see on every other channel out there. Now, with Adobe specifically, yes, we've covered this before. Yes, it is insanely cheap. If you look at the margin of this company, you look at the PE, a trailing PE of 20.4 times, a forward one of 14.3 times for a company that's still expected to grow revenue closer to 10% over the next coming fiscal years. EPS growing a little bit faster than that. 41.4% free cash flow margins. Yes, this is a company that will, of course, buy back quite a lot of shares if this stock does remain so cheap. Now, when we talk about why this happens, right, we've talked about that during the interview. It's sentiment around the name. It's still a question mark. It's a question mark of, okay, we've seen the rise of free AI tools. Is this going to disrupt an Adobe? Now, from what I've seen at Adobe Max, for example, is that Adobe is well integrated, or has integrated a lot of these free AI tools, although a lot of them aren't really that free, because if you want to really have the pro experience, you'll have to pay for ChatGPT, you'll have to pay for Gemini, you'll have to pay for Flux or whatever they're called, right? You have to pay for those. Or you pay for an Adobe subscription and you get access to all of these tools in the well-known Adobe suite of products. I think that's something that a lot of people that are not maybe professional designers, marketeers, illustrators, you name it, they don't know this about Adobe. Adobe has a huge user base. We've talked about that during the interview. Over 700 million monthly active users. Yes, okay, maybe a lot of them do use Adobe Express for free. It's definitely possible. Definitely possible. But I do think that a lot of people still think the same as with, let's say, PayPal. Who uses PayPal anymore? Well, just look at the data. The data doesn't lie. Same here with Adobe. The data doesn't lie. This is still a business that is growing, that is very profitable. And I do think that here as well, once the market figures out that, oh, actually, AI is enabling this company to grow much, much faster, let's say, or reaccelerate growth. I think that's maybe the better term to use here, is to see maybe a reacceleration of growth. I think that's when you're going to see this one move. But in the meantime, I mean, look at this. Digital media ARR since the February quarter of 2020 has grown at a compound annual growth rate of 14.7%. You're going to say to me, okay, but maybe the crash will come, right? The crash in usage, the crash in revenue. Maybe, but since then, I mean, Canva has existed. All the other free tools have existed. The rise in AI tools have risen, right? Maybe more recently here, but we're still not really seeing how Adobe is getting hit by that. Now, previously, the market was trying to see, okay, how much revenue can they generate, right? From AI revenue or services or whatnot. Adobe did come out with, right, their annual guidance for that, or more recently they say AI influence revenue exceed $5 billion. All of that is just to keep, let's say, Wall Street interested. But at the core, Adobe is still doing what it's been doing before, and that's grow, and grow in a very profitable way. Plenty of people use it. Plenty of people have seen what they've been working on over the last couple of years and what they are going to be working on over the next couple of years. And I can tell you some mind-blowing stuff were announced at Adobe Max. And so, yeah, I can understand the frustration. I can understand the frustration from the Adobe shareholders. Trust me, as a PayPal shareholder, I understand the frustration. We've seen that before. You see the company, you see the profitability, it's still growing. You understand the thesis, the market is not understanding the thesis. Okay, fine. But in the meantime, you can accumulate more shares. The company can retire more shares. And yeah, we continue like this. Now you're going to ask me, okay, that's great. You just interviewed the guy, talk about Adobe, so why don't you own it? Well, fair question. And I've said it before. Adobe is a great company if you want to have one of those solid, let's say, someone called it anchor stock. in your portfolio. Now, me personally, I'm still very young. I think I'm very young. And so as you can see, I am going after the smaller cap companies. Although I do have Meta, I do have Google, so of course, larger cap companies, but those are already, in my eyes, the anchor stock of the portfolio. Plus, in the retirement portfolio, of course, I have Amazon, Mercado Libre. Okay, you can call it maybe also anchor stock, but still small-ish compared to the others. And so for me to add another one like an Adobe, $136 billion in market cap, growing 10%, then maybe I'll have to cut something else. In the meantime, I'm very happy with my allocation. But yeah, hypothetically, if I were 10 years older, if my portfolio was worth a lot more, then yes, I would definitely go with an Adobe, because why not? If we are in an overvalued market or bubble or whatever you want to call it, why wouldn't you go for this type of thing? A trading P of 20.4 times, forward 114.3 times, gross profit margin 89.1%, operating margin 36.6% on a GAAP basis, right? On a non-GAAP, we've said mid-40s. Net profit margin 30 and free cash flow 41.4%. Like, why wouldn't you go for it? You tell me. You tell me down in the comment section below. Hope you enjoyed this one. See you all in the next one. Bye-bye.